Just at the beginning of the year, gold and silver were breaking new high, and there was so much excitement then. And now it seems stagnate, trapping in a wide range. And I believe it should remain this way for a while before it get ready to retest its all-time high and go higher. In this tutorial, I will discuss why precious metal may be staying in this range for some time. It is because of inflation. There is an expectation of a rising interest rates. And for a non-interest bearing assets like gold and silver, it is putting much pressure on them. But it is also the same inflation. It should ultimately cause these assets to break out from its former high set in January this year. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. Let's do a recap before silver peaked on 29th of Jan this year. A day before its historical high, I shared this tutorial title, Is Silver in Trouble? We discussed on this inverted hammer and its fundamental. The next day, let's go over to the next day. This was the inverted hammer. This is where I share. Next day, silver peak. And then on the 30th of Jan, the nomination of Kevin Walsh as Fed chairman, it sent the silver crashing. And he's being viewed as someone that is hawkish, holding a hawkish stance on inflation. And as the silver continued to develop, 1 week later, I developed a view and I expect that the precious metals likely to range in time to come. And I've updated the new tutorial back then titled as Silver Ranges Before Heading Up Again. And let's see its outcome as it developed over the past few months. And now is May over the last 4 months, I would say. And indeed, it has a range bound for a while. And let's look at some inflationary numbers here. The March core PCE is showing that inflation is on the climb to 3.2. And the Fed is watching this number very closely compared to CPI as the core PCE tracks inflation at a more personal level. And the latest April CPI is at 3.8, its recent all-time high. And with a trending inflation number, the next Fed chairman, Kevin Walsh, favor higher interest rates, being hawkish. And that also perceived for the US dollars to rise. And when the US dollars is higher, precious metal having this inverse relationship with the US dollars should stay under pressure. And this was our study back then on this inverse relationship between the US dollars and gold. What we could see here is that over a whole period of few years, when US dollars is down, precious metal goes up, down, it goes up, and during this period since 2022, indeed, US dollars has been weakening. Although someone said it's strengthening, I do not understand. But we saw that since 2022, the gold has been going up, and so is the silver. But with the inflation, precious metal is also an inflationary hedge asset. The narrative now is that with an anticipation of high interest rates, precious metal may stay under pressure. But because it is also an inflationary hedge assets, we can also see that the support is building up again. And let's see where's the support, because it is as a inflationary hedge assets. But we could see that it's also under pressure because of the expectation of rising interest rate. And there's also an expectation of the increase in US dollars, which I don't see, but market is talking about that. Therefore, it's an inverse relationship. We saw that gold and silver is under pressure as well. So there's support, but there's pressure. So for that reason, it formed this tug of war situation. And to me, that is a range trading opportunity. And let's check on the Fed Watch tools on the expectation of the increase in interest rate. So how to read this is that the current interest rate is between about 3.5 to 3.75. And so these are all the upcoming FOMC meeting, which means that if it's the upcoming 17th of June FOMC meeting, 97% of the market watcher believe that it will maintain, means that there's no hike. But I want to move very quickly to maybe at the end of 2027. You could see what happened here on July 26th is still unchanged. But let's move on to September 2026. You could see that 8.5% as of now, the sentiment now projected to September is that 8.5% of the traders believe that the Fed will increase by quarter basis point. And let's move on very quickly, as we could see increase to 17%, then increase, and some even expect that you'll increase by 50 basis point by then. But you could see the sentiment here, which is true, and that may also lead to the end of the year, even to the first quarter of next year, that inflation will still be on the rise based on the current situation. That's what the market believe. And let's go back to the chart here. And knowing that the support is somewhat established and resistance is pretty much capped, this create this range that I kind of pretty like it a lot, because where I'm still holding my asset class in the precious metal in gold and silver, but at the same time I've been buying on dip for my trading portfolio as well. So after this range, when the precious metals start to break up from this range, what could be the fundamental reason that will support the precious metal to rise again? I would like to hear your thoughts on this. Perhaps when it is about to retest its former high, I hope to update you with a part 2 of this tutorial. So stay tuned for it. If you find what I just shared is useful, please save it and share it to yourself or your friends. My name is Kon Hao. I enjoy studying how different markets currently behave to uncover emerging trends, the potential trending markets of tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that I stayed through this tutorial. You have many great trading weeks ahead.